Welcome to CrushTheStreet.com's weekly market wrap-up. Let's get started in the equity sector, which saw muted sessions of give and take, with today's price action being no different. Many investors are predictably sitting on the sidelines in anticipation of the Labor Department's jobs report. Perhaps the biggest news item from this week in the equities market was a technical decline of Apple shares close to key support levels. Of course, everybody pays attention to Apple because wherever it goes, so goes the rest of the market. I believe that the current decline represents a buying opportunity. Oops, I got a dislike for that one. Because from a fundamental perspective, it's not really clear that there's enough bearish news to take the shares below the critical $500 mark. Interestingly, during this morning's Squawk on the Street program from CNBC, Jim Cramer stated that there's a disconnect between the intrinsic value of the company and what is actually being reflected in market valuation, or, using Silverbug terminology, a discrepancy between the physical price and the paper price. Going down the rabbit hole even deeper, Mr. Cramer stated that Apple's discrepant value versus price phenomenon reminded him of, get this, silver at a higher price. He went on to say that eventually the weak hands need to be driven out of the market for Apple, and I'm assuming silver, to find its true market valuation. His words, not mine. In order for silver to get to that higher valuation that Cramer was referring to, it would need some help from the US dollar, and it's been getting very little of that over the past 3 months. However, the dollar peaked in near-term strength on November 16th, and it's been on a decidedly lower trajectory since then. Sure, today's price action took the greenback above the 80 level on a very strong one-day move. The close is just above the 50 DMA, but using Bollinger Band analysis, we can comfortably say that today's move is more of a desperation run than the beginning of a sustained rally. However, I am a realist, so we should consider some of the risk factors involved in precious metal investments in this current financial climate. Don Herold of DayTradeShow.com recently stated on his YouTube channel that silver and the dollar have been moving in tandem rather than moving inversely against each other. It's a really good video, so I hope he doesn't delete it this time around. Anyways, he stated that this was a significant red flag and that it portends a big drop in either the dollar or silver and other precious metals. However, I believe we should give the metals a chance. The fiscal cliff is adding all kinds of crazy into the markets, and in times of uncertainty, it's not wise to bet against hard assets. So let's take a closer look at silver. Yes, it suffered through recent bearishness, but using Japanese candlestick analysis, please note that Wednesday's session charted a doji star after a week of general declines. This suggests hesitancy to continue the bearish trend, and a reversal is possible. Today's price action was positive but muted. You can blame the fundamentals, and by that I mean Friday's jobs report. I don't want to speculate what that would mean for silver prices tomorrow, although I personally expect that the move will be up, and that's just based on my interpretation of the technicals. I will admit that the fiscal cliff issue could throw a lot of wrenches into my forecast for $40 by year's end, but it's not out of the picture by any means. I really don't believe we'll go down to 30, as there appears to be solid interest in this sector, and this is the seasonal cycle of strength for the metals. Therefore, the dips are buying opportunities rather than misguided purchases in a declining market. And that will do it for this edition. Thanks for watching, and we'll see you next week.
For more unconventional ideas, please visit CrushTheStreet.com.